Hey everyone, welcome back to Corporate Decoder, the place where we untangle the confusing language of corporate filings and find the real story. Today we're diving into Atmos Energy Corporation's latest 10K report. And boy do they have a lot to say about their pipes and profits, but stick around because we're going to break down whether their business is as solid as their pipelines or if there are some cracks showing. And if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below to keep the conversation going. So Atmos Energy, they are a big natural gas distributor and pipeline company, operating in 8 states and serving about 3.4 million customers mainly in the South. Their big goal, or vision as they call it, is to be the safest provider of natural gas services, which is smart because safety is everything in this business. They are really focused on modernizing their infrastructure and doing it in a way that makes sense financially, trying to get approved costs back into their rates faster. They break their business down into 2 main parts. First, there is the distribution segment, which is all about delivering natural gas to homes and businesses. Second, there is the pipeline and storage segment, which is mostly their Texas pipeline operations and some natural gas transmission in Louisiana. Think of distribution as the local delivery service and pipeline and storage as the long-haul trucking and warehousing for natural gas. Here is a quick look at their main distribution divisions, and you can see their Mid-Tex division in Texas is by far the biggest, serving over 1.8 million customer meters. That is a huge chunk of their business right there. Now, a big part of their business is regulated, meaning they can't just charge whatever they want. They have to get approval from these state commissions for their rates. The good news for Atmos is they have a lot of mechanisms in place to help them recover costs quickly, especially for safety and reliability investments. They say they can get about 95% of their capital expenditures back within 6 months, which is pretty good for a regulated utility. This helps them avoid something called regulatory lag, which is basically a time delay between spending money and getting to charge customers for it. They have these annual formula rate mechanisms in place in several states. This means they can adjust their rates every year without going through a full, lengthy rate case. They also have infrastructure programs that let them recover costs for new pipes and upgrades fairly quickly. This all sounds good for predictable revenue. And speaking of rates, this report shows some pretty significant increases in their annual operating income due to these rate-making actions. In 2025 alone, they got approvals for over $333 million in annual income. That is a lot of money coming from customers, but importantly, it is tied to their investments in the system. They even had over $231 million in rate increases pending approval late in 2025. See, this Mid-Tex cities approved the formula rate mechanism filing with rates effective the 1st of October 2025, which included a rate base of $8.3 billion. That's a massive number. It means they are allowed to earn a return on billions of dollars invested in that region alone. Let's jump into the hard numbers, starting with their balance sheet. As of the 30th of September 2025, Atmos Energy had over $28 billion in property, plant, and equipment. That is the actual pipe storage facilities, everything that makes their business run. They also had significant shareholders' equity of over $13.5 billion, which is a good sign of a healthy balance sheet. Now, the income statement tells us how much money they actually made. In 2025, their net income hit almost $1.2 billion. That is a decent jump from the previous year, and they attribute a lot of that to positive rate outcomes and their investments in safety and reliability, which is great. It means they are making money and reinvesting it back into the business. Looking at their main distribution business, revenues were up significantly in 2025, reaching over $4.4 billion. Operating income followed suit, climbing to over $963 million. This segment is really the engine for their earnings, and it seems to be running strong, boosted by those rate adjustments we talked about. Their pipeline and storage segment also saw growth, with operating income reaching over $596 million in 2025. The growth here is driven by rate adjustments on their Texas pipelines and increased demand for their services. It's a smaller part of the business compared to distribution, but clearly a profitable one. Now, money matters. Atmos Energy has access to a lot of funding through credit facilities and a commercial paper program. They say they have about $4.9 billion in total liquidity, which is a good buffer. They're not exactly short on cash, and they plan to spend a massive $26 billion on capital expenditures between 2026 and 2030. With most of that going to safety and reliability, that's a huge commitment showing they are investing heavily in the future. And what about compensation? Well, they spent about $33 million on stock-based compensation in 2025. These are awards given to employees and executives, often tied to company performance and stock price. They have incentive plans to keep their top people motivated. But it is not all smooth sailing. Atmos Energy faces several risks. Regulatory and legislative risks are big. If regulators change their minds on rate mechanisms or disallow certain costs, it could hurt them. There is also operational risk like pipeline integrity and potential accidents, which could lead to huge costs. Cybersecurity is a major concern too, as a breach could disrupt operations and expose sensitive data. And then there are always climate risks and the impact of adverse weather conditions. On the debt side, they have a lot of long-term debt, over $8.9 billion. They recently issued new senior notes, including a massive 5.45% note due all the way out in 2056. That shows they are borrowing money for the very long haul. They also use financial instruments like commodity and interest rate contracts to manage risks. For example, they use these to try and smooth out the impact of volatile natural gas prices during winter. The fair value of these contracts at the end of 2025 was about $3.4 million. It is not a huge number in the grand scheme of things, but it shows they are actively trying to manage their exposure to market swings. Now, here is something interesting from their auditor's report. They highlight regulation as a critical audit matter. This means it was a particularly tricky area for the auditors because accounting for regulated utilities is complex. They had to look closely at how Atmos Energy records its regulatory assets and liabilities, which are basically costs that are permitted to be capitalized because they can be recovered through rates. This whole area involves a lot of judgment and interaction with regulators. Looking at the big picture of their financial health, Atmos Energy seems to be doing quite well. Their net income has consistently grown year over year, hitting nearly $1.2 billion in 2025. They're making money and reinvesting it, which is generally a good sign. The regulated nature of their business, combined with their success in securing rate adjustments, provides a relatively stable revenue stream. Atmos Energy Corporation Chi operating. So what is my take on Atmos Energy? They're a well-established player in a necessary industry. Their focus on safety and modernization, coupled with their ability to secure rate increases, puts them in a strong position. The massive capital spending they have planned shows confidence, but it also means they'll be relying heavily on the capital markets and continued regulatory support. A key risk to watch is any significant change in their regulatory environment or a major operational incident that could dent their reputation and finances. But overall, they appear to be navigating the energy landscape effectively, delivering essential services and generating solid profits along the way. Alright, that is our breakdown of Atmos Energy's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.